Hey guys, simulate and trade here. Today we had a pretty ordinary day without a lot of news. However, that doesn't mean that we have nothing to talk about. Certainly, it appears that Citadel is actually tuning into the things we say and like, at least to a higher degree than I previously thought they did. I want to also briefly talk about margin calls today and quickly discuss how to correctly frame the way you think about them. Today we had a pretty great catalyst take place, with NSC002 and 801 both going into full effect today. We also had a filing, the DTC009, be passed today, but there appears to be a lot of confusion surrounding what this means and if it actually started taking place today because the wording on the filing claiming it is postponed. We will take a brief look at this, and explain what it aims to do because there is a lot of confusion happening, and people are already saying this filing is meant to allow the DTCC to let hedge funds do whatever they want and gives them room to not have to enforce the recent rulings that have been passed. This could not be further from the truth and goes to show the alarming level of ignorance in some people. Without further delay, remember to drop a like if you find this video helpful or educational, and let's get started. First and foremost, NSC 2021, 002 and 801 are finally out and in full effect starting today. This is a major cornerstone for us shareholders. One of the biggest sentiments I have seen expressed by concerned investors is that they are upset that the squeeze didn't start taking place today as a result of these two amendments finally being implemented. Let's get the sentiment out first of all. No, these rulings were never going to automatically activate the squeeze. What they do in regards to our beloved stocks is that they narrow the window by which AMC and GameStop can be manipulated. They add a lot of oversight from the DTCC into the ongoings and transactions that hedge funds engage and partake in. Before, the DTCC was very relaxed and would come in and check perhaps once a month on the shorts or option bets that hedge funds had. Now, with these rulings, they require daily monitoring and report from hedge funds as to what positions they hold. The reason for this is because the DTCC wants to increase their risk management. They want to require their members to have to disclose this information so that they can implement a more appropriate liquidity requirement from their members. They want for their members' upfront liquidity deposit requirements to be constantly updated to reflect a more responsible margin so that if and when things start getting out of control, the DTCC is not liable and full responsibility is on hedge funds. Furthermore, some of the previous rulings they have amended have been done with the purpose of constructing or updating a framework by which they can quickly act upon default members in the event they don't make payments on margin calls. What this does is establish a set of guidelines so that if and when hedge funds start defaulting, they can quickly suspend them and sell their assets in order to pay off for all the shares they have to buy back. The DTCC is simply saving its skin by presenting changes that would protect it in a legal way and cover all the bases so that if and when this squeeze happens, the market can better adjust and bounce back if it happens to fall. I always get this question, so let me answer it real quick. The relationship between the NSCC and the DTCC is that the NSCC is a subsidiary of the DTCC. The DTCC has many subsidiaries that have specific functions and have different focuses on parts of the market. To keep it simple, the DTCC acts as a bookkeep. As for why we haven't squeezed, the answer is simple, and for the most part it lies with margin calls. A margin call isn't a full end to everything. A margin call is essentially when a member is required to provide more funds because they fell below the expected requirement. If the DTCC margin calls a hedge fund, it doesn't mean they are automatically suspended and a squeeze automatically happens. What it means is that they will be forced to pay more money. Now, the issue for them is that once these margin calls start happening and they increase in requirement, things can get out of control really quick for hedge funds. The stress levels, which have already been reported to be out of ordinary and dangerous, can easily become really dangerous and start forcing hedge funds to liquidate positions in securities in order to meet margin calls. When these margin calls start happening, there will be a point where hedge funds will most likely quit liquidating positions in order to pay for the requirements, and that is when they will be suspended and we get our Lambos. One of the biggest questions is what could cause these margin calls. In my opinion, I think the real thing that will flip things on its head is an economic crash. As I have previously said, the United States is in a really precarious situation where inflation is a problem, housing is a problem, wages are stagnated and it's increasingly hard for people to put money back in the economy by spending. Today, we had a big article come out from MSM that reported big banks are starting to act in really mysterious ways, with their actions being synonymous with that which usually foreshadows a market crash. They say, as we have discussed in a previous video, that banks are not sitting with money overnight, and instead are having overnight deposits with the Fed grow out of proportion. For those that don't understand what this means, know that this is typical of what usually takes place in a market or economic crash. The report even made a great point in stating that the Fed is becoming almost like a parking spot for banks in relation to the buying situation due to the fact that the Fed will go in and save the markets. Bringing it all back, I personally think that either hedge funds exhaust resources in this scheme, which isn't going their way as more retail traders keep buying the stocks, or the more likely scenario, where an event a bit unrelated to hedge funds comes and disrupts the market that would make hedge funds be unable to meet new expensive deposit requirements without selling off big chunks of their portfolio, at which point they default and we get our Moon and Lambos. Now, let's start talking about the DTC009, because already I am getting disturbed by the insinuations from some smooth-brained apes. What this ruling attempts to do is reformat or update the wording in all the DTCC subsidiaries. Listen to me. They are not changing any of the new amendments they have passed. That would not make any sense, and this ruling doesn't mention doing any of that. What 009 does is shed light into its deadlines and processing times, defining in a legal disclaimer that they have the ability to extend their own deadlines as they find according. This is now a new formatted amendment that changes all these amendments we have been passing. It is a simple disclaimer. Now, this is nothing but risk management from the DTCC as the legal spectrum of things, so it's nothing to really get hyped about, as it does not concern any process of the suspension or selling assets of defaulted members. The ruling says it passed, but the wording does say it has been postponed, so it's a bit of a toss-up that some other reader could perhaps clarify to me. However, I am not that concerned about this, and neither should you. For the main segment of the day, it appears we have struck a serious nerve to Citadel. That's right, ladies and gentlemen. We have officially triggered Citadel securities. My poor boy Kenny is big mad today. So yesterday, a big piece of journalistic gold came out that explained and gave much needed insight into how the GameStop short scam came to be and what has been happening. A lot of the words cited as evidence came from my idol Broca, who I talk to as reference and as a guide because his ape brain is so wrinkled it looks like the saggy skin of a 100-year-old. So, this investigative private journalist, who is credible and has won numerous awards, was hit with a direct complaint by Citadel. She is not owned by some shill company to post lies. Broca attested that apparently, Citadel did not like the article and made their voice and concern heard. It wasn't any legal action, they just made a formal complaint about what she wrote because they disagreed and did not like what she had to say. It appears our boy Kenny the Malignant is in tune with what is happening and is making enemies of journalists that aren't bought or paid for. I am super happy about this recent development, as it shows character, or the lack of, and it shows just how much concern these hedge funds put on controlling the narrative of everything going on. Goes to show why when I tell you not to believe any news or become fanatics of a TV personality, you might want to listen. They are all bought and paid for to a degree, even if the things they say sound nice. Trust no one on the big media. Let me know in the comments section what you think bothers hedge funds the most when they see the type of comments and general public reception. The Fed engaged in reverse repo operations totaling over $813 billion today, a new record high for them. Dark pool trading reported for AMC accounted for 57% of the total volume today, while dark pool trading reported for GME accounted for 48% of the total volume the stock experienced today. Before we get to the technical analysis portion of the video, remember that I am no financial advisor and all contents in this video are my own opinions based on my endless endeavor to search for the truth and call out the shills. We are going to Tokyo drift through this section of the video because what happened today was pretty lackluster as the stocks moved almost sideways the entire day, which in my opinion is super bullish, so let me explain why in a minute. AMC had a pretty uneventful pre-market which it quickly ended with a sudden jump upon market opening. The stock passed 61 and then went down to consolidate around the VWAP line where it remained building strong support for almost half of the day. The stock broke resistance and moved over 60 before retracting back and trading between 57.50 and 59 almost until the day ended. The stock was hit with a brunt attack on the last couple of minutes before market close, ending the day at 58.30. GameStop had a more ambitious pre-market that was met with a red drop upon market opening. The stock bounced back passing 222 before dropping and consolidating a bit around the VWAP level around 219. The stock then dipped furthermore after a weird dip and consolidated further between 215 and 216. The stock then found the energy I envy in my wife's boyfriend, and it broke that 216 resistance, climbing past the VWAP and ending the day above it at a price of 219.34. Super bullish. The reason why today was such a good day was because the stocks built a ton of support. Guys, we cannot have every day having a run. We need to also build sideways and consolidate and build much needed support walls, which we are doing. Even if AMC ended the day slightly below the VWAP and below those consolidation lines, know that they will serve in the future. It was only because the stock was shorted in those last minutes with fake shares, and not indicate of a real sell-off. AMC could easily run and break past 60 with no trouble. GME is consolidating and breaking resistance. I have said the stock was massively oversold and it would be moving up from 197 where it was this Monday, and here we are. Stay bullish, stay hyped because today was a great day. And with that, I want to thank you all for tuning in with me to the end of the video. Let me know in the comments if you enjoyed the video and if you plan on buying more shares. Please drop a like on the video if you found it useful. Thank you to all who have pledged support on my Patreon or donated to me. I really appreciate all that you guys do. You guys make this channel possible. If you want to contribute, links for my Patreon are in the description below along with one-time donation links for my Cash App and PayPal. With that said, I hope you guys have a great rest of your day.